What is going on, everybody? Let's do another economic news update. Tesla released numbers on Sunday. We have an update on this, and then we have another update, which is a very logical question I've been asked. Why, although the interest rates, the Fed's fund rate is increased, right, by 0.25%, why the interest rates are dropping? Nobody knows how to answer this question very well, so let me try and explain this to you. So let's start with Tesla, which is the hottest thing that we can talk about. Tesla, beat expectations. I'm gonna put a picture here on the screen of the growth they've had since 2016, and then they delivered 422,000 cars, right? Almost 423. And then they produced 440,000 cars. They delivered 422. And the Model 3 and Ys, they're very close. You can see they delivered 421. They produced 421,000. They delivered 412,000. And then here is something that's a little bit on the, what's going on here situation. The Model S and the Model X, right? They produced 19,000 cars for the first quarter of 2023. These are the numbers we're looking for right now. And then they delivered 10,695 cars, right? The main reason that we have an issue here between the Model S and X, which are the most expensive and luxurious model on the Tesla lineup, is because first of all, they compete with the $7,500 tax credit that the Model 3 and the Model Y are receiving, right? So even if you're wealthy and you can afford the Model S and the Model X, why wouldn't I benefit from an EV that's gonna give me a $700,000 tax break? So the main reason they don't have such a demand, even with the price cuts they did on the most luxurious models, is this. Now, the thing is, why they delivered so almost 50% less? This is something that people try to figure out what's going on. Probably is because they prioritize, again, right, Model S and Model X to push out the door. What was expected for Tesla, right? Let me read you this thing. So it says here, the Tesla stock, right, declined by 6%, and the reason that this happened is because although they beat expectations, there is no this wow factor. Oh man, Tesla delivered so much more than we were expecting, right? And then you can get other companies and other analysts expect different things. So what happens here is you get to see that Tesla doesn't blow it out of the park, right? It just barely goes over, and the consensus sometimes, is okay, it's another car company. Now we have to face this reality that Tesla, right, got established now. It's no longer a baby, it's not in the business infancy, right? Tesla has some deep roots right now. It has the brand awareness, people know about the car, people want to try the car, and you have to differentiate and reinvent yourself again. And I feel like we have to accept that, the challenges that they face as startups start to kind of catch up on Tesla on the next level now, right? So we're gonna face this and we're gonna see this. They have a great lineup of products and things, but again, production, when you try to do too many things at once and then you try to add new products and then improve the existing products, it's always this kind of reinventing yourself as a company. So they have to do this again to wow the world for the next jump on the stock price. So they will do that, and we have no doubt about it. It's just more of an explanation of how, now that everybody tries to go into the EV world, they gotta kind of find themselves in a leading position again in a different way. I mean, the autopilot itself is just a differentiator that's put them miles ahead. It's just more like how the market perceives them, right? No. What I can tell you here, they were expecting, again, the Wall Street was expecting 421,000 cars to be delivered, and 422,000 cars got delivered, which is great news. I mean, it's a record high. I'm gonna read you a few things that analysts said about Tesla. So here's the thing. So Citi, the price target of Citi is $192 for the stock, which is silly, these analysts. But anyway, there were no major surprises in Tesla's overall delivery number. However, segment mix was lighter with S and X missing consensus, right? So you see, again, analysts are like, what's going on? Why do you guys produce 20k vehicles and then you deliver 10k? Here is a picture of that again. Given the stock run up on the Q1 of 2023 delivery report, expect a sliced, modest pullback on what will likely be regarded as an inline outcome with softer mix and linger inventory buildup concerns. Okay, the TD guys now, right? Look at this. Because these people, they say bad things, but they still raise their price target, right? Which is so silly. So TD put their price target for Tesla to 170 from 140, although we're already at 200, but anyway. And they say, Tesla again said that excess production was due to more vehicles in transit. This is TD's take, right? It's not just more vehicles in transit, it's just they choose to deliver more S and X's because the demand is so much more, especially after the price cuts. Weakness in Model S and X again was attributed to these cars in transit. So everybody here has a buy signal from the people I'm reading you. So Jeffrey said the debate about price elasticity vs general demand weakness will persist as production keeps outpacing deliveries, right? What do they want? You cannot deliver more cars that you are producing. Of course, you'll be producing cars and then delivering as many as you can, right? Now, the thing is that when it comes to market laws, right, you can have demand, and then the demand has to do a lot with, how much, you're gonna produce, because you're always kind of like, okay, am I pricing it right? Okay, did I price it too low or too high? Why isn't the demand there? So they lower the prices to make sure they have no inventory, right? But again, now the thing is, did they do the right move? And since they chose to go that route and reduce pricing, we don't see this wow factor that although everybody got a Tesla and then inventory is gone, right? It's not like they did like these amazing numbers we used to see 2 years ago. But again, Tesla is established, right? So after we talked about Tesla and how they beat expectations, they were down 6% yesterday, no big deal. They're a big boy company now, and then things get affected in this way. They're gonna come up with a Cybertruck. There is other things lined up this year. 2023 is building up to be a good year, seems like. Okay, let me talk to you about something that I got asked the other day. And I don't think anybody can explain this to you. There is some really good loan officers out there that they can go to the point, but here is the short story, right? Jerome Powell came out, he said, okay, we're gonna raise the fence fund rate by 0.25%. They put it at 5% altogether, right? So why, although they did that, why did the interest rates for buying a home got lowered? Well, here is your short answer to that, guys, okay? What happens is there is market expectations, right? And this is everything. And this is everything in human nature as well as the markets. When you expect something and it happens, it's no surprise there. When you expect something and it doesn't happen, then you have a little bit of an issue here, right? Especially when you expect something that's good and then something bad happens. The same way the markets function. So here is what happened. The markets were expecting a 0.5 or a 0.25 interest rate increase. This is what happened. And since this is what happened, the 10-year started, plummeting because it came right along the expectations. Now, what is a 10-year? A 10-year is a treasury bill that the US issues, right? And is tied very tightly with the interest rates of the home prices. So once the 10-year skyrockets, then you will start to see that the interest rates for buying a home, the 30-year fixed, the 15-year fixed, right? They start ticking up, as well as other interest rates, credit card, car loans, right? And then once the 10-year starts plummeting, along with it go like, the interest rates for credit cards, home loans, car loans, right? So things came along the expectation, and then there is a buying and selling of the treasury bill that causes this to plummet, right? So the 10-year starts plummeting, and then the interest rates start getting dropped. So long story short, again, the reason that the interest rates for buying a home got deep is because the 10-year plummeted because the interest rate increase that Jerome Powell did came right on expectations, right? I have the pictures here for you. You guys can see what's going on with the 10-year. First chart here, which is from March 6th to April 3rd, okay? And you can see it's a 1-month chart pretty much, and you can see the 10-year is coming down and slowly coming down, and it's because there's no surprises in the market. And then again, I'm gonna put the 10-year for 3 months, and you can see how this uncertainty came from February all the way up to April, or like mid-March, and then the 10-year starts coming down again. That was this week's market update. We had a little bit of a Tesla numbers came out, which is never a bad thing, and we had a little bit of a 10-year market update. I love you guys. I'll catch you guys soon. This same week I'm gonna have a real estate video coming up. Thank you for hanging around. You guys make my weeks better. I'm here to provide you more, and I cannot wait to see you on the next one.